Welcome, everyone. This is our GNUSpective, and I have Brent Arias here with me today. Of course, I always have him usually, except for the first few podcasts that we had done before he arrived on the scene. Today, we're going to be actually talking about a few things. I wanted to start off by kind of showing investment strategies that can happen inside the crypto space. And I had presented this at a family office conference last week. And I just thought it was great to kind of show other normies, as I call them, or as other people call them, people that aren't so technical. So this won't be very technical and diving into kind of our product or anything like that. It's more how it operates from a high level and how it kind of disrupts the VC community. So anyway, I'll go first. I'm Kenneth Hurley. I've been running GNUSai and GNUS Ventures for since 2016. So I guess it's about 8 years now, a little over 8 years. Prior to that, I worked at NVIDIA for 4 years. I worked at Google for 4 years, Amazon for a year, Electronic Arts twice for a total of 4 years in the 90s. Had started multiple companies, and this is kind of my final passion project of my career. It's a culmination of my career, but the GNUS Ventures is really a way to disrupt the investing industry into crypto and blockchain. So with that, Brent, why don't you introduce yourself?
Certainly. I'm Brent Arias. I have been a software technologist, for over 20 years. I had spent most of that time operating my own consultancy since 2006. I've had very large engagements with Microsoft, American Express, et cetera, and of course, all the way down to little startup companies. Most of that time was spent with large-scale distributed systems, hardening them, ensuring that they were operational for web scale, et cetera. I've worked 2 or 3 times with Ken in the past, and that's how we kept the relationship going. So Ken would keep on tapping into me. He said, "Brent, pretty soon I'm going to be asking you to come over to GNUSai." And true to his word, he went ahead and roped me in. So now I am happily on the team. So that's my background.
Yeah, and just a little bit while I open up the PowerPoint presentation. I won't just read it. I'm not like that, but in general, kind of would like the audience to let them know kind of what my expertise is to be able to be from a technology perspective, but more so from also an investing perspective, and what my background is how I came about to be kind of an expert on this talk and how this stuff works. I started a public company in 2005, and I worked for NVIDIA for 4 years. And right after I came out of NVIDIA, I didn't kind of know what I was going to do, so I was just kind of fiddling around with different things, and ended up starting a public company and kind of getting trial by fire. So I ended up, I can't sign my name on something I don't understand, so I had to understand something called MD&A, or management discussion and analysis, as well as profit and loss statements and balance sheets and the whole 9 yards for writing public company disclosure statements and financial statements. So I did that for a lot of years. I was helping out the attorneys and the CPAs kind of understand our business and writing contracts and things like that. So I've done a lot in that realm of business side of things. But I do come from a technology background originally. But for me, technology is just problem solving, at a rapid rate. And so this is kind of where I got the expertise. And also I've taught myself, actually, I taught myself almost all of this, but I do have degrees in computer science and management and an MBA as well, which were actually I went back to school after the fact. After 20 years in the computer industry, I went back and got my degree, challenged most of the courses, and then same thing with my MBA. I got it quite a few years after I had started the public company, so they weren't that difficult to get the piece of paper on the wall. But in general, that's kind of my background. With that, if you want to just kind of explain kind of what your expertise is, and I'll grab up the PowerPoint presentation.
Well, I already mentioned large-scale distributed systems, though I will say that along that way, being very, very hands-on and dealing with what are the barriers to lead times for delivery in the various different engagements I've been in. So kind of a jack of all trades, because it doesn't really matter what is in the way. Block and tackle, you got to take care of whatever is preventing the next release, etc. Usually that turns into testing. How do I produce the kinds of large-scale tests and performance tests that are capable of giving rapid feedback to the development teams so that the cycles can keep on moving quickly. I'm also an expert in control logic. If ever anyone wants to talk to me about control logic, I will geek out with you like you wouldn't believe. No, Ken, I won't do it. Don't worry. But having been in as a consultant with my own consultancy since 2006, up until joining with GNUS, I wouldn't say I've gone into the depths of the negotiations that to the level that Ken has, but certainly I have gone through many of my own negotiations for various different engagements, so I've had kind of that rounded out. I've been my own entrepreneur. I've seen all the sides of managing the details of a business, whether it be my own or even startups that I was assisting.
Yeah, yeah, for sure. All right, so I have the PowerPoint up, and this was the point of the whole podcast, or a good portion of it. I want to just kind of explain some things that I found back to my expertise. When I became an expert on trading stocks, I actually learned how to trade exotic options like iron condor and puts and all that kind of different option style trading, as well as just regular stock trading, and learned how to do something called DCA, dollar cost averaging, and arbitrage between Bitcoin and Ethereum. And I was making good money, but it just wasn't fulfilling. I mean, I really wanted to finish off this project, which was started off for AI for Good. But what happened was GNUS Ventures was formed to basically do kind of this non-traditional VC investing. And really, it's a combination of an incubator and a mentorship and some funding at times. I funded a few companies doing this. So it really turned into this what they call what do they call that? Anyway, I forget, but it's an aggregate kind of system, and we can go into different joint ventures and things like that. And I'll kind of explain that as we go through these slides one at a time. I won't read them, but I'll kind of talk about individual ones, and you guys can look at the slides here. There's only about 7 of them, and so we'll go through this pretty quickly. But what ends up happening is with our system, and what we've realized over the years, or I've realized over the years, Brett's come on in the last few years, but it really opens up a new way of investing with crypto, but into multiple different companies that want to integrate with the blockchain. And that includes, AI systems like GNUSai, Web3 gaming, or Web3 applications like Graffiti Entertainment. And I'll kind of explain how each one of those works with our system. So Web3 gaming and real world assets as well. Now, the real world assets do have kind of a problem a little bit with them, is that they can be considered a security at times, but in general, our token is highly unlikely to ever be considered a security, and I'll talk about that here in a little bit as well. But in general, when family offices or other investors are trying to look to invest in crypto or something, or blockchain projects in general, they're kind of limited in their scope and flexibility a lot of times, because the ETFs came out, like the Bitcoin ETF. But when you buy that, you're basically investing in Bitcoin. You're not investing in any underlying projects, because there really are none in Bitcoin. Now, Ethereum's kind of the same way. When they come out with their ETF, you can invest in Ethereum, but there's over 10,000 different tokens and projects that are on the Ethereum network that do not use the Ethereum token. They create their own tokens on the Ethereum network or on the Solana network and things like that. So when you invest in that, you're really only getting part of the Ethereum project. What our project ended up doing, and I wouldn't say it was on purpose, but it wasn't on accident either, was us crafting a system where if you invest in Genius or one of the child tokens, you'll actually really be investing in all the projects that are underneath our ecosystem. So we kind of talk about that. And venture capital routes are usually, throw spaghetti against the wall and see one of 10, and then it's a money churning thing. And we're not into that. We're into providing capital, whether that's intellectual capital or real capital like money, to businesses for the long haul, for long term sustainable businesses with forever income. And that's kind of our uh, investment thesis. And it's technology heavy just because there's so much opportunity to have people invest in these different companies early on without having to worry about securities laws and things like that. And I'll kind of explain that. And we open up the ability for family offices to very easily invest in joint ventures in certain verticals and things like that. What say you about venture capital, Brett? You've seen me in the whole thing there. Don't go too harsh on them though.
Well, the venture capitalists, it's interesting, having witnessed for a number of years the approach that they take to assessing where investments should go, what to take on. It just seems that there is a growing divergence between where the money is to be made and the classic models that they're holding in their heads. And so it just seems that a new bridge needs to be made in communicating, what is a proper way of viewing the world we're entering into. So
Yeah, and some of those VCs now today they're morphing into better venture capital that can help crypto and blockchain projects by basically getting a portfolio of companies, right? But when you're first starting out, we only have 4 companies right now, but we're going to be building that, so we don't have a real portfolio of companies yet. But our technology allows us to pull in companies so fast and not with a lot amount of money. We can invest anywhere from $10,000 to a couple $1 million fairly easily through our ecosystem. But yeah, I agree. The VCs, some of them are shifting and understanding kind of the disruption that's happening to the space in general. And blockchain is a big, really cryptocurrencies and Bitcoin and all that has brought the knowledge and everything to us on that. But yeah, um, so Genius AI, kind of, I want to explain how this works and not to promote Genius AI and anything, but we put together a ecosystem and smart contracts where Genius AI is a parent token in the smart contract. And then there can be child tokens, but you can choose to invest in a child token or a derivative token if you want in joint venture with us or not. I mean, just joint venture with Genius and you'll get exposure to all the projects, because every single one of the child tokens, like Graffiti Entertainment, for instance, is a derivative or a child token of us. And it all kind of rolls through us up to Ethereum and then eventually to fiat currencies. So what you get is the benefit of the Genius tokens liquidity along with you could limit your investment to, like, if you only want to be invested in games, you could. And so you just kind of have like this reserve currency where you can extract, profits and things like that. And there's a lot of benefit with Genius because it is acting like pretty much a transaction network, with small fees taken off on the transactions. So across all the projects that are on Genius, there's transaction fees that are happening. So if Graffiti Games is making, a million or a billion transactions a day, and then another company's making a billion transactions a day, the whole entire ecosystem is making 2 billion transactions a day and taking small fees off of that. And so it really acts like a credit card transaction fee system in general, but it's all done on the blockchain, so it can be done throughout the world. Um, like it says here, investors can choose to invest in the overarching Genius token, or for that matter, just pick and contact us. And we have a investment memo where it says, hey, we want to be involved in this, but we don't really care about this. And it's like, that's fine. You just can buy the Graffiti token or the Energy Cloud token or anything like that and still be invested in that particular vertical if you want to, if you figure you can handle your own risk on just being in the Web3 gaming space, for instance. But all the tokens and all the applications that have online users are actually contributing to AI processing and machine learning processing to do things like cure cancer and stuff. That was the original goal of this, and so that's kind of how this blockchain came about. We originally were just going to help, get GPU the unused GPU cycles out there for people to use to do things like curing cancer with folding at home and other projects, and it kind of just exploded into this great ecosystem that helps out game companies or lowers the cost of AI for other companies that need to use AI and stuff like that. So and what ends up happening is, I'll let you talk in a second here after this, Brent. I know I'm going on and on about stuff. It empowers investors through decentralized technology, and that's what I was just talking about there. It facilitates the ability for you to participate in NFT transactions or in-game items, crypto transfers, and real-world applications like you can have a video app, and in the background we'll be doing AI, and payouts will go there. But even more so, if you tokenize your real world asset, and when you fractionalize it, that's when you kind of, in a real world asset, that's where you kind of become into a security issues at times. But the for us personally, ours has a utility and a utility patent, and so I don't we are don't pass 3 of the 4.5 things in the Howey test, and so we're probably pretty good about not being a security. We're more of a commodity because we're tokenizing a real world asset, your GPU and your electricity, basically. And then we didn't raise money to get the product done. I funded the whole entire thing, so that's another reason that we're probably not going to be considered a security. But now there's a time for investments to be made in an already existing token, GNUS on Ethereum, and or one of the other tokens that are derivatives to basically access the real world asset tokenization and the profits that are being made from those transactions. We also provide a seamless bridging to 4 EVM machines, which is Ethereum, Polygon, Base, and Binance Smart Chain. And we do have a Bitcoin, what's called a BRC20 available, that we'll be able to bridge between Bitcoin and our AI as well. And so these other blockchains that are sister blockchains, we're in L1 on GNUS, allow us to transfer money or cryptocurrencies in and out of Bitcoin and the other cryptocurrencies into our own system to be able to do AI. And then when the payments are done, they can go back out to Bitcoin and hence fiat currencies and stuff like that. But like I said, all the tokens that are in our system are actually child tokens. They're on our smart contracts that are the exact same on all those other blockchains. And then basically it acts as a bridge between the different blockchains, including our own blockchain, to be able to bridge in and out of our SuperGNUS blockchain. And so that's how we kind of empower investors, is the ability to kind of get into Ethereum. But what you're doing is you're almost doing a syndicated investment by doing that, because now instead of just one token like Ethereum and one project, when you invest in GNUS, every project that we launch or launches on GNUS, you have access and you get a part of that token. And we can do, like we said, we can do joint ventures with companies. We already have 3 or 4 lined up, and we're kind of beating them off at the door because everybody wants to do it because they realize how well they can monetize their applications and their software. Part of that. So at that, I'll kind of chime in, let you chime in there, because I know you have a little bit to say about that part of it.
Well, yeah, actually, I want to go back to the concerns about regulation. Everyone in the crypto space has had their concerns about regulation, and in some cases, actually ran afoul of some issues. However, the climate regarding crypto, even for whether it be in Congress or we're talking about the Federal Reserve, it's kind of been a 2 steps forward, 1 step back kind of thing. And I think what we're witnessing is this collective awareness on their part that if you can't beat them, you join them. So the favorability just keeps on growing, and this is also what's contributing to the valuation of crypto in general. So I just wanted to point out that we're finally watching, we'll say Washington, even if reluctantly, and I'm not even sure it's reluctantly, after a while they get it bit by bit, and so I think that is something. The concerns of that are just going to keep on ebbing away.
Yeah, and well, nice segue, by the way. Um, Here we'll show a little bit about graffiti, but there's a couple slides ahead that talk about. We'll talk a little bit more about the upcoming administration policies that they have and how that's really favorable to crypto, and I'll explain why if they can get it implemented. I mean, it's been talked about, but I think it can be implemented, and I think it's going that way with everybody that's kind of being put in place that is crypto favorable. But let's talk about games in general. Everybody loves a game, and so this is one of the companies that I started a while ago, and we've resurrected because they have 100 games under their belt and they have a bunch lined up to actually implement and use Genius. So they have their own token that rolls up to the parent token GNUS. And what happens is that each one of the games can have their own token. And so while you're playing the game, we can leverage the excess GPU and pay out the game player and the game developer. And this enables what we call negative friction monetization because it's very easy to integrate into these games. It's like you link to an SDK, and we've been very diligent and adamant about making it super, zero friction. But then when we realized, we started talking at the game developer conference to a bunch of game developers, and every one of them said, "When's it going to be ready?" And the reason is because they don't make any money. About 96.5% of the games and the apps, for that matter, on the Apple App Store and probably even higher on the Google App Store, make $0 for the developer, or the end user usually ends up paying. And there's only about 3.5% of the games that actually get paid players. And even that 3.5%, they only monetize between 2 and 15% of the players. So there's a very, very small portion of players or users of applications that are monetized. And our system allows all of those to be monetized through the usage of their GPU and tokenization of their real world asset, the GPU and the electricity. And then they get paid out, and the developer gets paid out a percentage. And that way it opens up monetization channels, all the while feeding the high demand for AI processing and AI and GPU usage for whatever reason, whether it's AI, machine learning, or rendering, or any number of things that the GPU can be used for, including other kinds of compute. But on top of that, the third bullet point here is kind of really important for family offices. They want to make an impact worldwide. And so this blockchain and decentralization enables global income and wealth creation across the world. So somebody playing in Africa or the Philippines and Malaysia, and they don't make a lot of money, but if they can go in and play a game or be watching videos or learning or doing any of that, they can actually make money doing that while they're doing that by helping the rest of the world, solve AI problems or machine learning problems, or even rendering, which is not really a problem, but at least it's entertainment. So what say you, Brett?
Well, I think that maybe I want to underscore a little bit what you meant by negative friction, and as you said, removing as much of the obstacles as possible for an application such as a game to be revenue positive. And I think what got overlooked there is just how many of those game developers actually have to modify the game and its mechanics and its storyline, etc., to accommodate a monetization strategy. So it's actually slowing them down to have to make those explicit alterations. This is part of why we say negative friction, is because this is giving the developers an opportunity to say that they don't have to change anything about the actual video game that they wanted to make in the first place. They can just build the ideal version of the game and not concern themselves with those other matters. So that is part of why we're actually taking a burden away from them.
Yeah, we're removing the necessity for ads in their game, which they're not making money off of anyway. 480,000 games on the Apple App Store, and 440,000 of those make $0 with ads. So we have 440,000 just games alone that kind of could use our system and start to monetize. And we don't really care how big they are. We're not after the millions and millions of users, because if we had 440,000 and each one of those had 100 users, now, we have that many nodes in our network that are doing AI processing, which is astronomical, right? Just for the Apple App Store alone. And there's 18 billion devices out there. So that's why we call it negative friction, because we remove the need for you to put ads, but we also remove the need for you to go out and find those paid players or those paid users, because every single user is now being paid. while it might not be a lot, at least it's better than zero. And then, it'll grow as the token grows and the number of transactions happen. So it is very cool and something I'm very proud of for sure.
Because I think we may have a bit of a new audience today, I also want to answer a very frequently asked question, which is, oh, well, goodness, so you're making it possible for those users to start earning when they are doing exactly what they were doing before. However, does this represent a drain on their battery? Are we cutting the life of their battery in half because in the background there is this AI processing? And the answer to that is no, because so many of these applications utilize very little of the GPU to begin with. And even a typical video game uses hardly more than 10% of the GPU. Our utilization of the GPU is meant to be oriented towards, pardon the technical framing here, horizontal scaling. And if you don't know what that means, it just simply means that we don't need to take a lot of processing power from each of the devices. We can take just a small sliver, so that 10% of processing that was being done with the game that they were currently playing becomes 12% or 13%. And given such a tiny additional load on their GPU, they're not going to notice a difference in their battery.
Yeah, and it also depends on what game you're playing. Like some of the AAA games will go up to about 50% of the GPU maximum on the Apple. At least that's what Apple has said. And if it's a AAA game, but you're playing some little 2D game, there's a huge difference. Like it may only be using 10% on the 2D game, whereas if you're playing a high end AAA game, that has millions and millions of users and stuff like that, it could use up to 50%. We'll probably still tap in, another 5% or 10% of the 50%, so 5% of the total GPU power there, but it won't affect your game at all. Really, it depends on what you're playing. Your battery life is really dependent on what kind of stuff you're doing with the GPU. Like I said, if you're playing a high-end triple end game, your battery will heat up and all that and drain. So we don't really.
We're not the ones responsible for that.
Yeah, we're not the ones responsible for that, by the way. So yeah, or we're only 10% responsible, I guess. Right? Only when you're on AAA games. I kind of want to get back to the investing side of things, because what this does is I put Graffiti, but I'll show on the next slide another company and why we're not just games oriented. We realized kind of a few years ago by Brent's brother actually asking me a bunch of questions about, hey, can we put it in this? Can we do this? And all the answer was always, oh, well, yeah, that's pretty easy to do. And we realized, oh, okay, we can put in a lot of different verticals into this, and I'll explain why. But it allows your portfolio to not only invest in Web3 games, but another version of real world assets, or a sleep application, or a music application, or a video playback application, or streaming application. And I'll talk a little bit about one of our partners that we're using that is on board, called NextLogic, that does that. But it also, more back to the investing side of things, it gets you access to deal flow without traditional VC routes, right? You can just come in and go, hey, I like that token. I like what they're doing. I've read their white paper. Boom, I'll buy some of their tokens, right? Because their tokens are really just, what you end up doing is buying a derivative token of GNUS, and then you have a liquidity exit strategy fairly quickly. There's other ways for you to invest directly with us in joint ventures, and we talk about this quite a bit with people. Is that if you're a big family office and you have a bunch of businesses and you want to reduce your compute costs down by 80% plus, you can actually pre-buy this commodity from us, and then if we'll lock it up for you, or we lock it up on you for 6 months, and then invest over 18 months, so that you just don't speculate on it. But if you want to use that immediately for AI processing for your companies, it's kind of this dual investment where you say, hey, I'm going to pre-buy this commodity that I'm going to use. Then I'll migrate my company over to this reduced cost AI system. And this is coming. So you can take my word on it. I predicted a lot of stuff, but this is coming, where people are going to start realizing that decentralized compute is 10 times cheaper than going to Amazon and Google and the rest of them. And the cost of this decentralization is almost zero for us, because we have no operating expenses, or very little operating expenses, because it's all on the blockchain and automated. And then we have no capital expenditures, because we're using people's devices, like their phones or their at-home devices. So it kind of gives you this direct access. And the last biggest thing that I tell people is the new administration has promised to make the any U.S. company that is in crypto and is issued a crypto 0% tax at the federal level. That blew me away. I'm like, if he's true to his word and that policy comes about, we're golden. Especially on the Genius, where we were born in Wyoming. We almost left, but we never did. We stayed in Wyoming, and we have the Genius token that was all about AI. It's not a security. And if he comes up and says, based on keeping intellectual property and driving forward um, innovation by keeping the stuff in the US. Hey, here we are. We've been doing it for 8 years and we have everything. We've been driving innovation forward, just waiting for the blockchain legislation or the blockchain. Just, we needed to know kind of what we should do on things. We've been very careful about not raising money until we were sure that we had clarity on regulation. So that is a huge tax advantage over you going in and investing in a VC side of things or a VC company or doing regular equity investments because, unless there's some loopholes for equity investments, but they usually have to hold it for 5 years and all kinds of stuff. But so there's multiple avenues for you to invest in this syndicated investment. We can do safes, which is a simple agreement for future equity, but just the tax advantages that are under proposed policies by the Trump administration are just phenomenal. Kind of thing that hopefully we'll see in 2025, where you can do that. But even if you can't, there's still other ways to mitigate your taxes and with the crypto space in general. So I don't know if you know about that particularly, Brett, but it was kind of cool that Trump had said that a couple months ago, and so it's very good for crypto. And now that they're being more crypto friendly about things, I think it will drive innovation. It was forcing innovation out of the U.S. and now it's kind of like, okay, Trump has said Matsuyama or whatever from SoftBank was like, "Oh, I'll put in 100 billion," and Trump was like, "How about 200 billion?" He's like, "Oh, okay, I'll try." That was so hilarious. It's like, but that's the reason is because if he's putting 100 billion back into innovation in the U.S. and there's tax friendly treatment on that, of course there's going to be a lot of income investing coming back to the United States because he's trying to rebuild the negative. The friction that was there for building uh, industrious companies and technology companies, and now 2025 and forward, at least for the next 4 years, is going to be wonderful for us.
Well, I want to also point out that I don't believe that the bright future that we were talking about is like somehow a direct relationship to Trump. So yes, indeed, he is announcing things that are very favorable. But my point in saying that is when his term is done, I don't believe, oh, look, see, everything got rolled back. I don't think that's going to be the case at all.
Well, I hope not, but we got 4 years to figure it out, and it's. I really think we'll be way beyond. The genie's already out of the bottle and has been. They've been trying to stop it for a while, But in general, as Andreessen Horowitz, Mark Andreessen point out, choke point 2.0. I've known about that for years, but I was never debanked because, in general, I didn't take other people's money. And so it's kind of hard when you put your own money into a project for them to debank you, because you're not making money off of or taking other people's investments and violating any securities laws. But let's talk about other kind of real world impact. And I'll talk a little bit about how this whole ecosystem has a huge impact on society in general, and which is good for impact investors. But one of the things is we support all kinds of different Web3 apps. And besides that, there's this thing called Energy Cloud that we've invested in, another vertical that has nothing to do with games. But you wouldn't think that they really have anything to do with AI either. But what they do is they use artificial intelligence to basically monitor, and they're in a bunch of places. They have a bunch of contracts that they fulfilled, and a couple more coming up in January. Very, very good company, and I've done a lot of due diligence. One of the benefits of GNUS Ventures is I'm able to go into these companies and analyze what they have and analyze where they should be going and quickly, because I've analyzed so much technology over, my career, that I can go in there and go, hey, you should think about this because this is going to be a faster path to get done what you're needing to get done. And you shouldn't be reinventing the wheel here because this is already there and blah, blah, blah. As you know, Brent, I do that a lot with our own code and things like that. So we have 120 repos, but a lot of those are us leveraging other people's technology and then fixing stuff, right?
Yeah.
For ourselves. And but back to Energy Cloud, they're going to create a child token and enables monitoring and measuring and improving outcomes of impact investments, because they can lower your costs to electricity based on AI, looking at what building types, what climate you're in, time of day, all kinds of stuff. And they use AI to basically do that and reduce the cost of energy. And they monitor like gas flows or water and electricity flows. And so we're collaborating with them on an ecosystem that kind of bridges AI, because they need to use AI for all that. Well, guess what they're going to do? They're going to use our AI system to process the AI, or the machine learning, really, to help do that. And so they're all on board for. I made a pretty big investment in them because just their contracts alone that they have for they do things like they have a air quality thing that attaches to HVACs, which is basically an air conditioning unit, and it filters 99.99% of COVID and other kind of things. And they have the University of Southern California, the Keck School of Medicine lab, where they've done a bunch of tests with some very gnarly biological agents that they filter out with UV and things like that. And that's just one of their products. And so they have a air quality monitor that I have sitting in my office. I wasn't going to actually show this, but in general, this is kind of one of their air quality monitors that show, kind of what your air quality is. And I used to have a bunch of allergies and they would hit me really hard. And now that I've kind of been filtering that stuff, it's almost non-existent. And so that's one of the things I love about this, is it's helping solve health issues. You wouldn't think it would, but just the filtering of COVID and killing COVID, of course, that's going to help health issues. But you never think that kind of you have health issue solutions with AI and reducing energy costs. So it's kind of a cool technology. And I analyzed the company. I talked with the CEO, and I did all the due diligence for everybody that wants to kind of invest. And there's kind of no risk, or there's risk, of course, always, but there's very little risk with investing in the GNUSai token or the Energy Cloud token, because if that one doesn't work out and it goes belly up, which I'm pretty sure it won't, now you have Web3 gaming, or you have something else where your GNUSai tokens are all kind of increasing in price or increasing in value because of the other companies. And that's where we get the syndicated investment. So what do you think, Brent?
Oh, actually, I was just going to say thank you for the advertisement on the air quality system. I'll be ordering mine. Could use one of those here in Mexico City. So
I'm sure. Oh, you shouldn't have doxed where you live, dude. But that's okay. I'm sure they can find out. That's all right. So that's a pretty cool system that we like. And here's the biggest thing that one of the biggest takeaways that I want people to kind of understand with this incubation system, which I think we've kind of covered, but more the new investment paradigm that's available for everybody, including family offices, and the trend away from traditional VC investing of churning money. Instead, we're not churning anything. What we're doing is sustainable, long-term businesses that are forever generating income and driving up the price in an aggregate fashion for the token itself. And so it really, the AI or the Genius system and the ecosystem on the blockchain really, and its child's tokens, redefined how wealth is created, but even more is how it's distributed. Across, like we said, there's small amounts that can go out to the African person that's playing video games or watching videos. He can turn around and use that money for going to the doctor, right, and pay, and increases his wealth over there, and probably double. Because I hear that on average in the poorest countries, like $80 a month that they make. And so it could end up that they could double their income and use some of that money to go to the doctor and things like that. And on top of it, what we end up doing is if there is a health app there, we can actually train on, around the world their health issues, right? And try to help feed that data back into curing cancer or doing any number of things. And so it's this whole ecosystem that is distributed in nature, but it also slashes compute costs by over 80%, 80% plus. We can almost go down to any number we want because we're paying out in these digital assets, whether it be an NFT or an in-game item or actual Genius tokens. It's kind of a value that doesn't equate necessarily to US dollars because the value of the US dollar will buy you more in Nigeria, for instance, than it will in the US. So you can't really say how much am I as an American going to make if I just play a video game and things like that. It's kind of it doesn't correlate because this is like worldwide. It may not benefit you much, but it's going to benefit the person in Nigeria a lot. But eventually that Genius token, if you hold them, as they say, it will grow because of all the processing going on and the increase in the token. So you as an American, may have to hold it longer to buy a loaf of bread than somebody in Nigeria would. That's where the difference comes in. And like I said, again, I can't emphasize enough the incoming administration's push for tax advantage domestic crypto innovation. Hello, that's us. And we've been doing it for 8 years. And so I think that's phenomenal kind of thing. And I think that might almost be the last slide. So if you want to chime in and we can continue.
Well, certainly. I do want to point out that you look at the original expansion of Bitcoin, and there was a time when individuals would be mining on their own desktop, et cetera. But in time, we know that turned over into the hands of people who are investing millions and tens of millions into warehouses with their proof of work system, and it kind of removed that opportunity away from the casual user of the system. And I just want to kind of touch upon how we have, in a sense, reverted back in a very positive way from with our network, from users who are the product. If so many of the applications and networks that you can be participant of, you are the product. You are the one being monetized. And we've taken that and we've completely just turned that around. It's like, no, you are the recipient. And rather than having to watch the taking away of opportunity from individual users that go off to the giant warehouses, et cetera, the network of the billions of IoT devices and handheld devices, it's already there. So like that, it puts value right back in the hands of users.
Well, I think that's a great point because in general, I should add that as a bullet point in here. In general, you should own your own data. And this allows you to own your own data and monetize your own data, right? And in the past, it's like if you go on Facebook or any of the other ones, they grab your data and then they monetize it for you by sending you ads and things like that. And I kind of set out to disrupt a lot of different industries. I set out to disrupt one industry, and that was the GPU compute industry specifically, to do AI for good, basically, and do things like cure cancer, stuff like that. That was my original goal. But when I saw that my wife and my daughter were being monetized, through games, I'm like, that's ridiculous. My wife was spending $600 a year on a really game that I could have rewrote in 3 weeks, really, and I got kind of mad, and I'm like, this is ridiculous. So I've integrated that, and so I've given ownership of your health data and all that, because if you think about it, if we have your health data, we can keep it private, and then we can analyze it and run it through machine learning and then feed it back into the system, and your data is still private because it's been converted into this this aggregate kind of something called gradient descent and all this data. So it's been morphed into something that you can't even you can't revert back and figure out who it came from or anything like that. It's massaged in such a way that the privacy is there. In fact, our whole blockchain actually does that by decentralizing little pieces. And your brother had a great analogy of this, where people are concerned about the privacy or the encryption of things. And what we do is it's like you're a couple of sand granules on a beach of billions and billions of, on this huge beach. And even better, it's more down to, you don't even know you're sand. You're more like okay, you're silicon dioxide, one component of the sand. And so how do you, just knowing that you're silicon dioxide, know that you're part of a beach, right? Or even knowing that you're part of a grain of sand? You don't. And so it kind of, I don't know what to call it. It's not encryption necessarily. It's kind of hyper obfuscation, which is a big word. What do you think, Brent?
Well, it's funny because not really exactly related to what you're talking about. The ZK snark technology that we have been tapping into, that is a mathematical representation of what you're talking about as being just a kind of organic dynamic of our system. One solves a problem mathematically, and this one is just by sheer distribution, the small fractional size of what you are operating on. What do you do that information? And if you were trying to collect all this information that would be from all kinds of disparate usages, you wouldn't be able to assemble it back into anything meaningful. It's almost like, if you were sent into a facility that had a bunch of shredded documents, thousands of shredded documents, and you were told, hey, why don't you go find the top secret document out of this? Like, are you kidding me?
Yeah, well, it can be done. No, that's kind of, that's a little more plausible than breaking encryption, for instance. But and there's nothing preventing us from running our, what they call fully homomorphic encryption on these. We're just the infrastructure for it. So you can run a TensorFlow shader or a regular shader that's fully encrypted. It's just going to be slower. But I don't think there's really that necessity, and that will further enhance the, but you're talking like maybe 0.00000. I mean, it's almost infinitely impossible to reconstruct any part of the data, just like in encryption is. So it's effectively encryption, and ZK snarks do use encryption, but that's more for us to maintain privacy than it is to run. We're not running your AI or anything in an encrypted format. That's really up to you. We just give you the facilities, and then if you produce the shader that runs an encrypted data, which they do have availability to do, it just slows down a lot. And there's really, in my opinion, there's no need to do that, considering the naturally distributed format that we offer, that everybody gets less than a grain of sand. It's like an isotope of a piece of sand, or not an isotope, but a component of the sand. And so how do you reconstruct a beach from just knowing that you're a silicon dioxide component of sand, right? Like,
yeah.
It's the same thing with encryption. That's how encryption kind of works, but it's not effectively encryption, because we're not running through the way they do encryption and things like that. So, all right. So let's go to the final and last slide. We got about 12 minutes left, and we'll kind of wrap up and talk about the state of affairs of AI in general, because that's something you and I love to look at. Here we go. And so how you can kind of, you can talk to us, you can reach out, to us at GNUS Ventures. I have my LinkedIn profile. I'm on Telegram and all that. So if you want to kind of look at what we have going on, we have a memorandum, an investment memorandum for the aggregate or the syndicated investments that we're talking about, the four of them that we're kind of exploring. But there's ways for us to explore other opportunities, and have an impact on the world, and impactful investments. Like I was saying, the impact across the world, can have an impact specific for your joint venture investment. If you want, you can say, hey, I want to target, Africa for the poor. And so let's build something that targets that. And it's fairly easy to do with our system. Like I said, it's zero friction to integrate. And then, to distribute to the world is all digital through downloads, or, the Apple App Store, or, the Android store. So we're cross-platform. And that's the other thing that I set out to do, to make sure the distribution channels are ubiquitous through, Linux or Windows or Mac OS X or Android, or even iOS. But on top of that, I kind of wanted to talk really quickly, even IoT devices. And this is one of the verticals that we're entering into. NextLogic in the Philippines has about 200,000 nodes with these. Half of their set-top boxes have these in there, which is a Raspberry Pi or a compute device. This one's called an Orange Pi, but it's effectively a Raspberry Pi. And this is basically a full-blown computer that has a GPU on it that we can leverage. And we've already done that and use these as one node in our network. So the whole Philippine ISP can come in and install our software. And so while they're watching movies, they can be doing AI processing. And if you think about it, the impact, this basically makes us a virtual data center for these countries where they can basically install this, and all of a sudden they have 200,000 AI nodes that they can leverage internally. They don't, but it's global. It's like, okay, you have 200,000 nodes, so you can contribute however much of those nodes you want to the Philippines. But if there's not enough things for you guys to do, the rest of the world can leverage it. And so that's what the beauty of this decentralized networking is. And it's going over pretty well. People kind of, it's hard for them to understand a little bit, but this really is the next wave of disruptive technologies that I set out to do 8 years ago, mainly from the GPU perspective, but now it's turned into disrupting so many different industries and monetization channels. And I kind of feel a little bit like Robin Hood, or well, not like Robin Hood, but doling out the wealth to the world is kind of a satisfying thing.
I certainly prefer that approach to alternatives in terms of bringing a greater equity to the people, whether they in the U.S. or across the globe, et cetera. And by the way, when you held up the Orange Pi and you said, this is an entire computer, in case there's anyone who misunderstands, when he says it's an entire computer, he doesn't mean, and this entire computer has to be inserted into a much larger box in order for it to function. I mean, it is the whole thing. In fact, Ken, I don't know if you have one of those little tiny media center. Do you have the?
Yeah. Well, look at this. So you can see that's a network cable, and one of those is an HDMI out, and there's a USB port, and then there's a power supply. So you can actually just hook this up to any monitor, and you can put your keyboard or your mouse or hook that up to a multi USB thing and basically run Linux, or this one's running Android 10. And so, it's not necessarily inserted into a set-top box, but one side of that is in the set-top boxes is this, and the other side is this 2 gigabit fiber optic networking chip set that's over here that's doing the communications between the devices. You could still communicate. I'm not sure. I think in the set-top boxes, this is probably replaced with that fiber optic communication chipset on the other side. My guess is. So this is inbuilt into set-top boxes, but everything else is the same chipset, and everything else, like I said, it probably just substitutes out this right here, which is the networking device for their fiber optic networking device, which makes it very much like a brain, believe it or not.
I mean, and this is assuming that they're not handing out also their own routers, which now I'm a little biased towards the paradigm we have in the U.S., which is, you have a router and then the set-top box is diminutive compared to that. But
no, the router is built in. That's the other side of the chipset. It's built in. I believe it's that's the whole side of that other side that I was talking about. It's router and networking chip. I believe that's what it is.
Well, that's tidy. That's certainly tidy.
It's tidy, and they're only about $25 total cost, something like that.
Mm-hmm.
So it's kind of crazy, but all right. So we got about 7 minutes left. I'm going to stop this part of it. Let's talk a little bit about, kind of the state of AI, because in general, there's all this stuff going on. And one of the beauties of our system is we're just the infrastructure, right? We don't have to build the RAGs or which is something in AI to isolate kind of machine learning or AI into an area like, law or something like that, or into, image generation or something. And it kind of isolates the world's data into what they call RAG, which is something retrieval, augmented generation, or something like that. And I don't want to get too much technical, but, the world like Meta and Meta Research and Google Research and Microsoft Research especially have done a great job of, a good job for us, really. They've been driving forward the distributed nature of AI for us, right? And it's been going on for a long time. Berkeley has done it. We don't have to do any of that. We're just providing the infrastructure for them to launch those new technologies on. And so I personally have predicted a lot of stuff over the years, and I've predicted I have a prediction, in fact, that started in 2016, that the traditional way of doing AI or even doing compute in general is going to be disrupted by this distributed nature. And if you don't believe me, I have a patent from that I filed in January 2019 that is exactly this, exactly what they call a decentralized physical infrastructure network. And I predicted this starting back in 2016, actually, when I first got involved in crypto. I tore apart what Ethereum was doing with GPUs because I was mad that I couldn't buy a GPU for a game, and they were all being sucked up, and the price kept going up and up and up. And I was like, why are they using GPUs? Why are they taking away and driving up the cost for me? And so that's why I had to tear it apart and figure it out. And that was my aha moment of how this could be used for AI and disrupting the industry in the future. And so it's coming to fruition. It's coming fast and furious. And what do you think, Brent, about our future?
Well, I feel like there's almost an analogy here that has been used in other contexts. The Great Western, like California gold rush, and you're either trying to make your money by finding the gold, the little nuggets in the ground, or you're just a fella who's selling the pickaxes on the way to the mining sites, and not really. Analogies being what they are, they can be a little weak, but I feel like we're kind of the people with the pickaxe. So we're not the ones that have to invent the next wave of groundbreaking AI. The pickaxes. We're just providing the pickaxes, and so that all y'all can go off and go use all that those wonderful tools to go do your mining, so to speak.
Yeah, that's a great analogy. And there's another analogy with infrastructure. All the money's usually, when you're building a city, is all in the infrastructure, the roads and the underground pipes and all that. But I think it's more like, back to your pickaxe thing, I think it's more like, hey, everybody else has pickaxes. And we're like, okay, we have pickaxes, but here's a laser too. Or an atomic, laser thing that can blow out the ground, or you're back in 1849 and here's a metal detector, right? That's kind of how I feel we are over everybody else, because we have all this decentralized GPUs that nobody else has been tapping into. They've only been tapping into the high end GPUs, and there's 18 billion of these GPUs across different devices in the world. Apparently, it's between 12 and 18 billion, but whatever, that's a lot, compared to the high end GPUs that are out there in the H100s and stuff like that. I think there's only been about well, now that Elon bought a bunch of them, I think there's only about 650,000 H100s that have ever been produced, and he's trying to put in 1 million into his centralized server area. And so, that he raised $6 billion to do that. You know how much we raised to build our stuff? Nothing. I basically paid for developing the infrastructure myself, and it's way more economical for us to build it. Way less than $6 billion to build this whole entire ecosystem.
Well, we're just leveraging, without the capex that everyone else is dealing with. I still think about, how do you extend this analogy of the pickaxe, because as you were attempting to do, because we're allowing people to utilize hardware that they already have.
Yeah.
So it makes the analogy starts to fall apart, and as you said, it's what we're offering is something actually much better.
Yeah, maybe we're kind of offering almost like a brain extension, like Neuralink, to the 1849ers that can analyze and read, ground penetrating radar. I mean, it's pretty phenomenal what this system is capable of. I get astounded every time somebody talks to me about hey, is this a possibility? I'm just like, oh yeah, we could just do this, and then blah, it's there. It's like, it's crazy.
And the expense, of course, too, because in the realms of where would I personally like to see the next breakthroughs in AI? For me, it would be like personalized medicine, and there's a whole conversational topic there. But the thing is that I don't want to pay a lot for this muffler. So having that processing power available to me for my own personalized medicine. And it's dirt cheap. Well, I tell you, welcome to the 21st century. Finally, we arrived.
How about you getting paid for using?
Getting paid for analyzing my own health.
Yeah, and that's kind of the point of the system, is trying to distribute the AI processing, and people getting paid for us leveraging their real world asset, which is electricity and the GPU that they already own. So yeah, we're just about out of time. Got about one more minute. Any closing thoughts, Brett?
No, I'll just point out that we are still taking care of, the bugs that we're finding with the test net, moving ahead with that. We've got, a couple people on vacation. Understandably, things slow down a bit when you go into the holidays. However, when we get to January, of course, we'll be going full tilt again. But thumbs up over here. And I mean, with that, I don't think I've got more to report.
Yeah, just one kind of final thought is that also people were like, well, how do I make a child token, in your system and things like that. And believe it or not, we've gotten to a point where you fill out a form, a Google form, send it to us, and then we create your token on the contracts, and boom, you're part of the system. That's how easy it is. There's no code involved, and that's what I talked about in here. There's really no code for you to integrate into our system either. Like I said, you just link to the SDK, and we have that. I don't know. I guess it's pretty beta right now. I mean, Justin has been doing that and integrating with the wallet and the game that we're showing people on our test net. So it's a pretty cool system. So yeah, with that, I think thank you everyone for your time, and hopefully this was informative about kind of how you can invest in the blockchain space and the technology space with lowering your risk, and syndicated investments is kind of the strategy we had. And with that, I will end the stream, and thank you very much, Brent, for